Every day, we see headlines about Bitcoin and Ethereum ETFs being scooped up by institutions. But if so much money is flowing in, why is Bitcoin still stuck? Shouldn't we be breaking out? Well, let's break it down and cut through the noise. First up, here's the ETF story. Bitcoin's ETFs are still seeing inflows, even if the pace has cooled off. ETFs for, you can see right here, ETFs for Ethereum also net positive, just not the explosion we saw from November 2005 to around February of 2024. I'm sorry, November 2024 to February 2025. Okay, that period was stronger than this period that we're seeing right now, but still not bad. All right, this is still better than the beginning of the Ethereum era, ETF era. Okay, as you can see, there was a lot of outflows, a lot of red, very little green, and as you can see, it's trending. It's trend down a little bit, but still, it's moving in the right direction, guys. Okay, that doesn't look bad at all. These steady inflows are exactly why Bitcoin isn't breaking down. Institutions are buying dips and locking up supply. That's what creates a real price floor. That's a very, very good thing, guys. But here's the puzzle. With all the institutional demand, price isn't breaking out. Spot buyers, the ones that send the price higher, are just not showing up. Okay, they're not showing up. Volume is weak, conviction is low. Derivatives confirms it. CVD, still negative. Open interest is flat. Funding rates are barely positive. Nobody is piling into longs. Sellers are quietly in control. Both sides are. Now let's zoom out. Macro is actually flashing green lights. Look at equities. Dow Jones closing in on near all-time highs. NASDAQ all-time highs. SPX all-time highs. And still trending up, all of them, as you can see. VIX, fear gauge, is essentially at yearly lows. The dollar is weak, right? Easy to see that one. This is classic risk on. All of what we're looking at is telling us risk on. If there was ever a setup for Bitcoin and crypto to run, this would be it. What we just saw would be it. Even gold, just chopping sideways, not surging, not crashing. So there's no big flight to safety happening. So with all this crypto tailwind, why isn't crypto ripping? Simple. ETF flows are giving us support, but the rest of the market is still in wait and see mode. There's no risk appetite. There's no broad risk appetite, just baseline demand institutions. In whales, they're not adding here. Some minor outflows, but nothing major. Retail, zero FOMO. Meme coins and alts are dead quiet. Both whale and retail are sitting on their hands, so price just essentially grinds sideways. Bitcoin right now is consolidating just below 108,000 right now. It's at 107,731. At least we're above the 50 and the 200 EMAs, okay, up against this line right here of resistance, which today is at 108,000. But it can't reclaim these highs right here. Not even this one at 110, 111. On the weekly, as you can see, stalled at this resistance, this line of resistance that you can see clearly. No breakout, but no breakdown either. Also, you can see it's just hugging this line essentially. The ETF floor is working. This is your ETF right here, guys. This is your ETF floor right here. But it's not enough to lift it off, to get it past this area, okay, where we've been before right here. Altcoins and meme coins, look at others. You can see still bleeding. Okay, the structure is right now is building to me a local floor. Okay, a local floor. So everyone's playing it safe, waiting for some type of signal, right? Real quickly, Miggle's looking like this on the weekly. We'll take a look at it on the weekly. Toshi looking like this on the weekly. KitKat looking like this on the weekly. Doggerman looking like that on the weekly, right? So right now, I mean, we're seeing higher highs, guys. These charts on the weekly don't honestly look bad, but we're just waiting and seeing before the big rips come. When they will come, it's got to be boring for a little while until Bitcoin and retail start coming back in, and they will. Right, until we see the start of the parabolic run, and we will. It's going to be boring. So here's the key. Without ETF inflows, BTC could be in the 90s right now, in the 90 range. That demand is our safety net. But if spot volume returns, and it will, if whales start buying, and they will, or if macro takes another leg higher, then we could finally see a breakout eventually. Watch for real volume spikes, not just ETF trickles. That's when the moves come. Until then, we're just bouncing between support and resistance, and we will be watching, guys. We will be watching here. You can see the volume. I'll let you know when things start spiking. Bottom line, ETF demand is real and it's holding up the market. But without true spot buyers, it's not enough for a breakout. Don't force trades in this chop. Wait for confirmation and real conviction. If you want more honest market breakdowns and daily alpha, hit subscribe, join our Telegram, and let me know in the comments what's it going to take to break us out of this range. See you in the next one. Peace.